Welcome to the Dive News Desk. I'm Jim Tyson with CFO Dive here at Money 2020, 2025. I'm here with Ben Borodach, the CEO of April. And Ben, I really appreciate your being here with your insights. What are your expectations this year, given all the creative destruction of AI and new innovation? What have you learned, what do you expect to learn?
Well, appreciate you sitting down with me, Jim. It's great to be here. You know, obviously this year is all about AI and financial services, and there's still a lot of talk about crypto and stable coins, but I think the focus is really on AI. Financial services is one of the largest spends in our GDP, and we're seeing a variety of different applications. We work with more than 70 fintechs and financial services organizations to embed and offer tax products to their end users. And we've seen tremendous tailwinds in our business, being able to accelerate the development of our tax engine with AI, being able to lower the contact rate through customer service. And I think what we're hearing from the market is really in search of use cases. And I think there's really two things that we're seeing. One is, where's AI actually meaningfully better, right? So I get that it can work and maybe there's an interesting or cool proof of concept, but where can it actually drive my top and bottom line? I think customer support has been a classical use case that a lot of CEOs are talking about. And the other one is, how can it help me speed up? And development and engineering is one where it's actually increasing the pace that business is able to move. And so I think on the one hand, CEOs and executives are looking for what's working, and on the other hand, they're looking for, what am I missing out on? What has my competition figured out, maybe in marketing or customer acquisition, or in an algorithm where I don't want to be left behind.
So when you go to a customer, potential client, what's the value proposition that you offer? I mean, can you say you'll cut their compliance and tax costs by a certain percent, or what concretely do you say?
Yeah, so what we're doing at April is facilitating the ability to embed tax in every financial decision. And so that we believe that the next decade of financial services is going to be all about personalization, building on top of the digital platforms that we already have. And so our view on that is tax is a necessary offering that every fintech and financial services company needs to be looking at, and we're a provider, kind of the picks and shovel, if you will, to the ecosystem, and part of what we're able to provide is that tax data in a compliant manner, and that allows all of our clients that we're working with, many of the largest financial services providers, to take that data and hook it up to their flywheel. And so when you think about AI providing that next best action, what is that loan that you should take? What is that account that you should open up? Now that you just had a new child in the family, we're able to provide that data in a way that is not just compliant, but also value add to the underlying customer and end user.
And so they can apply these insights throughout the company, right? It's not sort of just a one-year process, it's ongoing.
That's exactly the reframe of the category that we're trying to facilitate. If you think about tax, it's one of the largest spends that Americans have throughout the year, both in terms of the tax refunds, $300 billion a year, and also $2 trillion plus in terms of payments that are made by US households. And so if you think about what happens when someone participates in the upside of a company and they go to sell a stock position, the alpha or the ability to get something out of that is not going to happen when you go to file your taxes, it's when you're transacting. And so that's what we're doing, is bringing that ability to the point of decision making and allowing the financial services platforms to be more relevant.
Now the tax landscape's been very dynamic this year, of course. April, I would think you're able to adjust to that fairly quickly, fairly dynamically?
Yeah, we have an advantage over a lot of the incumbents. About 80% of tax returns are processed by about 4 companies that were built over 40 years ago: H&R Block, TurboTax, Wolters Kluwer, Thomson Reuters, and we built our technology in the last couple of years, and that gives us a major advantage in leveraging AI to make sure that we're able to turn over the engine faster and more efficiently. That delivers a better customer experience, more robust compliance, but it also allows us to redeploy those research and development resources to net new functionality. And so relative to our competition, we're able to move much, much faster.
Terrific. So what do you anticipate? I mean, what are you looking for? What do you anticipate you'll be able to take from Money 2020 back to your company and for deployment? Is there anything you're looking for? Who do you really want to talk to, I guess is the question.
Yeah, we're client-centric, so we're working with the largest financial institutions in the United States, trillion-dollar asset managers, Fortune 5 companies, top 5 payments institutions, and we're really focused on their needs. And so we're listening closely to the way that they're leveraging AI and the way that it's affecting their business, and how we can be a piping and part of that work stream to facilitate and be part of their platform.
So are your own plans for deployment or improvement of your product really geared to the needs of clients, or do you initiate things pretty much on your own with what you just intuit? To use the wrong phrase. But.
Yeah, we look at different places for inspiration. Obviously we're looking at what other companies are doing. I sat down at a CEO conference recently and listened to the way that a CEO was leveraging voice AI just at a very niche part of the customer contact, but was having tremendous success both in their ability to drive down their contact rate, but also in the ability to drive more top of line by hitting the customer with a phone call at a very critical part of the process. So we're looking at many different places to draw inspiration. We're looking, and hearing what other leaders are talking about, what other innovators are deploying, and we test many different things. But I think ultimately where AI is today is, there's a lot of interesting proof of concepts, but at the end of the day, some stuff is still only 70, 80% correct, and it really has to be 90 plus or 95% correct. And so a lot of the value is being created, and how can you get something that's working at 80% and bring it up to 90, 95? So for example, in OCR, optical character recognition, when you want to ingest documents during the tax process, like a W-2 or 1099, Gemini from Google, for example, is pretty good. But the ability really is how can you train it and tune it to your specific needs so you can get it up from kind of maybe that 75, 80 percentile to that 90 plus.
Well, yeah, your point really raises the question, how does a CFO today measure return on investment with all the competitive pressure, with all the dynamism and potential from AI? How do you weed through the apps that really won't fly with those that are really promising, and how do you deploy them in your company? I mean, what top 3 points of advice would you give a CFO who is trying to weed through all these apps and choose the best ones? How to measure ROI today?
Yeah, I think obviously there's a lot of pressure to invest, and everyone's looking for ways to drive down their costs, ways to reaccelerate their businesses, and so CFOs are naturally going to be under pressure, and I think the key is, number one is have an ability to test. You need to devote part of your capacity to testing and trying and learning, and be willing to have things that fail and maybe succeed in a POC, but you can't ultimately bring in. The second thing is you need to make sure that you're maintaining a high quality of standard. You might have something that works in a POC, but it may not ripple through the organization when you really roll it out, and I think that's what we're seeing is sometimes things work in a couple of proof of concepts, but then when you really deploy it, you start to see breakage and you actually spend more time reviewing things or finding errors than you did maybe in the upfront costs. I think you have to look for that, and I think the other thing that I would caution people is, look, some places AI is going to be a cost saver, but we think that this is much more like the cloud revolution, and it's really all about the ability to reaccelerate your business. And so if I'm CFOs, I'm not only looking at my organization, but I'm also looking at the broader company, thinking where's that best marginal use of dollar and resource so that we can reaccelerate our growth.
So to look to the broader company, you've got to get pretty much the broad company involved in this assessment. So you mentioned do you agree that you need a team that represents all different units of a company in order to do this effectively?
Absolutely, I think this can't be a standalone organization, and different CEOs are going to have different philosophies. Some are going to do it by business unit, some are going to have a centralized center of excellence. I mean, I think ultimately the businesses or the specific leaders will know best, but I think you do need to sometimes push them to get out of their comfort zone. And I also think you don't want to be redundant and have testing the same tool 11 times across the organization.
Mm-hmm. So what concerns you have about deployment, not just deployment of your product, but AI in general? I mean, what would keep you up at night as the economy, as your clients consider both your product and others? What are the big sort of tiger traps here?
Yeah, I think certainly as we pull the human back or redeploy the human out of the process, I think certainly there's a concern around quality and hallucination still, making sure that we're maintaining a high standard of care, especially in financial services. If you go wrong, you could be not compliant, or you could cause a major error in a loan or a payment process. Agentic payments are blowing up, but if you add an extra zero or you buy something from the wrong jurisdiction, you could really sort of cause a lot of pain to a business or an individual. So I think there's still a little bit of caution, especially in financial services. And the other place I'd say, more broadly speaking, I think there's this question of is this sustainable? I think, this notion of are we in a bubble, certainly I think there will be booms and busts. I think generally we're up and to the right and this is, here to stay, but I think certainly you've got to look at some of these investments and say, is this thing I'm invested to, is it going to be around tomorrow, and how do I protect myself, make sure that I have optionality on the platforms that I'm building on.
So maybe not an AI bubble, but are there micro bubbles out there?
I think there's going to be booms and busts, right?
Yeah.
Just like the internet. I think this is certainly real, but I think when you look at the round tripping of revenue, I think certainly VCs are taking shots and they know that some of these things aren't going to work out, and I think as an executive, you have to ask yourself, what are the implications for me? It's not do I invest or not, it's really about how do I invest and protect my business and protect my customers.
Fantastic. Well, thank you very much, Ben. We're pretty much at time, and thank you all for joining us here on the Dive News Desk and at Money 2020. Hope you can come back too soon.